Welcome to In Good Company, a show where we keep a close eye on the biggest corporate news or moves, breaks down earning reports, and highlight the companies shaping Nigeria's business landscape. I am Uade Ahimie, and I'll be standing in today as your host. What has happened? It's early release of results, and this is something that really hasn't happened in a long time. Usually, you start to see results come out about March, February, late February, early March, but it's like the FMCGs are taking the cue this year. When you look at what has happened to them over the last 18 months since the new administration came in, then you actually do realize that this is released at the fastest I've seen in a number of years. The battle of the FMCG giants, so we're looking at the focus. The focus will be on Cadbury versus against Unilever. Both companies we know have had challenging times, both for 2023 and 2024 full year. The full year numbers tell a story of resilience, recovery, and market dominance, and that is really what it is. We haven't seen that for Nestle, but these two big giants have come back in a big way. When you consider the fact that they were swimming in murky waters at the end of 2023. And then we'll have a look at the new giants, or we call them the new giants. Well, the new kids on the block in the oil and gas industry, Aradel Energy. This is good news for me because they just joined the exchange in September, and their year-end results is already out just before the end of January. For me, it tells me that this is a company that really wants to be able to tell its customers and its stakeholders that they are going to be there for the long haul. Why? Most of the big oil companies usually come out, like I said, most results starts coming out early February, but I think there's a change this year. Aradel is the first that has come out in the oil and gas company, and we'll be looking at those who will come out subsequently, and then we might have a comparison of some of the giants, maybe Aradel against Seplat as we go on. But let's look at the FMCG face-off. Cadbury versus Unilever. We know that the FMCG sector has been in survival mode for the last 18 months. High inflation, exchange rates that has tripled over the last 18 months, and price of goods have just continually gone up. So raw materials for them have been an issue. FX has been an issue. But we can see that Cadbury and Unilever are showing a huge rebound. Let's start with Cadbury, who I call the comeback kids for 2024 in the FMCG. Pre-tax profit had hit 2 billion, which is a major shift from losses that we saw earlier in this year when they posted some of their numbers during the first 3 quarters of the year. Although their full year loss has reduced by 47%, which is a turnaround motion. We know FX was a major issue last year, but I think they are beginning to get a hang of how to manage those situations. The losses have reduced by about 47%. Revenue surged by 51% from 44 billion to 66.5, which is a huge commendation, especially when you consider the fact that the market is so thin and the ability for incessant price increases has become very thin. Consumers have become wary of price increases. Consumers are also dealing with inflation in different ways, and so on and so forth. Cost pressures remain a major challenge for Cadbury. The cost of sales jumped up from 39.9 billion to 55.8 billion, meaning that there's still so much work that needs to be done by Cadbury in terms of managing those costs. But like I said, inflation, exchange rates, devaluation has been a major factor, especially when you consider the fact that some of the raw materials that need to be used are not local. Let's look at Unilever, which is even a bigger comeback. Bigger revenues, their turnover grew 44% in 2024. This indicates a strong consumer demand despite all the economic challenges that Nigerians are facing. I look at both, and I see they play in some similar segments and some in some not so similar segments. So it's something that we would also look at in good company maybe in the near future, looking at those numbers about their products and which ones contributed to these bottom lines that made it more significant for Unilever. Operational efficiency continue to play a key role for Unilever with strategic cost management that help to keep margins in check, which is something I think Cadbury has also employed, but they haven't gotten to the stage of Unilever. Unilever's focus on core brands and exit from certain product lines last year appears to be paying off, and that's what I was saying. So when you look at it, they all used to play in practically all the segments of the FMCG. But Unilever last year made a strategic decision to move out of some product lines, and we have seen, I believe that this is some of the things that are helping us see this reduction and management in costs. Why? Because when you look at it from an accounting perspective, are they contributing enough? The contribution effect in terms of cost accounting of those lines, are they contributing? Were the sales were they able to cover their variable cost? If they were not, then that's really what the issue is. And getting out of that means that you will still incur those fixed costs that are already in place, meaning that those machineries are going to be there, but you can use them to produce other products which would increase the contribution effects on those products and so on and so forth. Stronger brand positioning and premium pricing strategy has also helped Unilever, and that we saw. So in looking at the battle of these two FMCGs, who is winning the battle? I think Cadbury has a stronger comeback story, but Unilever has maintained a steadier growth and a bigger revenue base. Cost efficiency will still be a key focus in 2025, so that both companies need to manage that cost and ensure that costs go down. Cadbury also has to be able to turn around from that loss position, although it's reduced significantly by almost half. For 2024, but they still have to manage that. We know that Q1 2025 will be a crucial part. Why? Those numbers, when they come out at the end of March, early April, we now start to see what the direction will be. While Cadbury is winning the turnaround game, Unilever is taking the lead in revenue generation. Let's look at another sector away from the FMCGs, oil and gas. The new kids on the block, Aradel, came into the stock market, NGX, listed sometime around September, reached some of the highest prices, I think almost 400 naira per share, and has maintained consistent management of its shares on the exchange. On the exchange, Aradel Energy, we have their latest results, which are stunning. Well, we expect that from an oil and gas company. We know that they're part of the consortium who have just been able to get hold of the Shell oil blocks that were let go by Shell. And when you look at their pre-tax profit, a whopping 187% year-on-year increase to 321.6 billion. That's pre-tax. Revenue surged by 277%, hitting 492.4 billion from 130.6 billion in 2026. This should give investors confidence. 277%. I'm wondering what the share prices will look like by the end of this week when the markets close. I'm sure Ugodre will be able to provide you some greater analysis in terms of the share pricing and all on Follow the Money on Monday, which you can catch on Classic 97.3 FM between 8 a.m. and 8:30 on Monday. High crude oil prices and strong production outputs were key drivers for this, but we've seen crude oil prices move up and stabilize along the 72, 76 dollar a barrel. Only recently, early this year, had moved up to late last year, early this year had moved up to about almost $80 a barrel, and we've seen the effect on the numbers. I think another thing that has helped those numbers also is the fact that the prospects of them working in that consortium to add additional barrels to their numbers is something that we would also look at. After tax profit of 253.9 billion, even after paying a massive 67.7 billion in taxes, wow, the federal government has received such a huge amount from Aradel, which are the new kids on the block. They still have a solid cash flow, and this we know it. For Aradel, is not just paper profit. The cash flow is solid, and there's real liquidity behind the numbers that we see. The big question, however, is can Aradel sustain this level of growth, or will oil price volatility and regulatory risk slow them down? Well, these are questions that would continue to answer as we go on in 2025 on In Good Company when we look at the numbers again at the end of Q1. But the fact remains that Aradel isn't just winning in that space, it's dominating. If oil prices remain favorable, like we've seen moving up to the $80 mark, although with the incoming Trump administration, where he's going to loosen regulations in terms of America being able to drill oil. We don't know what that portends for the oil markets. He wants lower oil prices so that inflation can drop back to less than 1% in America. But we wait to see how that will play out. But the fact remains that if oil prices remain favorable, they could be on track for another record-breaking year in 2025. Before we leave, we've talked about the battle in the FMCG. We've talked about the new kid on the block in oil and gas. Let's just give you a feeler of who the other market winners and some of the results that have come out and what that means. Let's look at two more companies making headlines. Ikeja Hotels, pre-tax profits up 39.46% year-on-year to 5.2 billion. Tourism and corporate travel rebounds are some of the things that are helping drive this growth. Livestock Feeds PLC also Q4 pre-tax profits of 681.8 million, backed by a surge in revenue and other incomes. This is an industry with tight margins, so profit growth is a major win. So what are the big takeaways for In Good Company for the day? The FMCG sector is showing signs of recovery, but cost management is key for 2025. Oil and energy remain dominant. Aradel is a proof that high crude prices can fuel massive earnings. Other sectors like hospitality and agriculture are bouncing back, showing that opportunities exist across industries. The truth is, are we beginning to see some impacts of the reforms that this administration are putting in? Well, wait to see how 2025 will be. That is it today for In Good Company. Keep watching the numbers, and remember, when it's oil, consumer goods, or hospitality, the market rewards those who stay ahead of the game. My name is Uade, and it's been In Good Company. Thank you.